And I'm bullish Bitcoin, particularly for what you said. And the Fed's going to make it go that way, and it's not going to save you until the stock market goes down.
Today, we have Bloomberg Intelligence senior commodity strategist Mike McGlone discussing Bitcoin and crypto and what the market can expect in the coming weeks. McGlone highlights a disconnect between market optimism and underlying economic realities. He believes the market seems to have forgotten the past interventions by the Federal Reserve to support the market during downturns, but points out that a crash is the catalyst in that financial rescue. However, he argues that this time the Fed's focus on combating inflation may result in less support and actually hurt the economy. McGlone also points out the severity of a recession and expects the Fed to act only after a significant stock market decline in the months ahead. He says the Bitcoin-Nasdaq ratio shows that we have a major overvaluation, which makes him worry about the end of 2023. Let's get right into the latest interview with Mike McGlone. Don't forget to hit the like button and subscribe if you enjoy the content we do here on this channel. Let's get right into the video.
Bank of Canada, surprise rate hike. Federal Reserve, we're hawkish. ECB raised. Bank of England raised rates. The only key countries that's cutting rates is China, because they're in a secular decline and they're going to be facing a recession from the rest of us. So the key thing is, let's look at the next meeting now, July 26th. We're at 70% that they're going to go 25, and that's the key point that I think the market doesn't get yet. Is this is the big cat and mouse game between the stock market and the Fed. And the Fed is not going to ease, in my view, ever, until the stock market tells them to. A bit of a worst case, kind of a delusional stage where the market hasn't figured out yet. So I like to point out a few facts. Went back and just figured out a little bit, you watch markets versus a 200-day moving average, and sometimes it gets too cheap and sometimes it gets too expensive. So right now, the NASDAQ is 23% above its 200-day moving average. And that's since 2000, when it had that all-time high. It's only happened on 3 separate occasions. It almost always comes after it goes down a lot. Moving average tilts lower, and then it points back out again. The point is, it virtually never stays that high above a 200-day moving average. It's never happened with the curve this inverted. So that point to me is what the market doesn't get yet. Is it's priced for all this normal human nature, optimism and hopium that just forgot that the last almost 30 years, every time the market went down, the Fed was there to save you. This time it's going to be pointed out clear from all these Fed governors that we're not going to save you. We're focused on inflation. My forward-looking measures like PPI are collapsing, commodities are collapsing, but we're focused on our measures. And I don't see a win-win here for risk assets. Yes, I've been wrong, but now this is the way it always happens. You have to battle. You have to get that periods where people have irrational exuberance with a lack of fundamental understanding, meaning this is an economy that's just tilting towards recession. The Fed's going to make it go that way, and it's not going to save you until the stock market goes down. What did people get wrong a year ago, starting with crude oil? Initially wrong right away, and then it turned out that way. Why did the vast majority of people expect it to stay above 100, and it's at 70, and still things like natural gas collapse? Because they missed the demand pull side of what's happening globally. Now, when's the last time we heard an upward revision of demand pull estimates from China? It's all trickling down. So that's a secular decline in this economy that just blasted off in the last 20 years. It is, we all know it's way overdue. Every single economy in the history of mankind, when it goes up that fast, has a significant correction. So that's just getting started. So let's look at its 2 main places what exports to. Now they're high now, but the thing I do on weekends is, some of us do, is I study and listen, read everything I possibly can. I hear a major divestment. Everybody's doing whatever they can to get out of China, and China's even doing what they can to get their manufacturing over to Mexico. So their main 2 clients, US and Europe, not only did they obviously get them upset with this war, but they're going to a recession. What stops this? Well, they're all raising their rates. Why is China cutting their rates? So that to me is the beginnings of a global economic slowdown. Now, probably a recession. It's just getting started. The key thing is there's nothing here to save it at the moment.
McGlone says a global economic slowdown or even a recession is imminent. He points out that the Federal Reserve's current tightening stance may not align with the economic realities, but he does believe a downturn in 2023 will lead to the bear market much sooner than most expect.
And then I look at things like, well, Bloomberg Commodity Index, it's collapsed. You look at producer price index, they've collapsed. Copper's going down. All these things that are really supposed to relate to that global economy. So to me, the Fed, the fact is, they're still priced for ticketing. The fact is, for commodities to bottom in this environment with the number one source, demand pull source for the last 20 years trying to ticking lower, is you basically need a long and variable lag to Federal Reserve easing. That means you need basically a weaker dollar, you need the Federal Reserve, that lower plateau. We're so far away from that, if history is a guide. So now I ask people, then if you expect commodities to go up, so what's going to cause that? Were you the people who were bullish last year? That's what's happened. We're in the early days of the supply and demand elasticity kicking in. We still have massive supply of all the production signs are still kicking up because they were a sell forward on the curve for same things like crude oil. And the demand is still ticking downward. It's just getting started. Like I said, the bottom line is, right now, virtually every risk asset on the planet, most notably commodities, are completely subject to that stock market. It has to go up just for commodities to stabilize. And what's the risk? The stock market goes down and everything follows, like crypto. So that's the problem, is it's all about Fed and monetary supply right now, and they are still tightening. At least they're still expected to tighten. It's not just the Fed. The most coordinated central bank tightening in history is still going on. So when people talk about the end of the banking crisis, I'm like, what caused it? Well, rates are going higher. What really and that's the key thing I'll end with, what really sparked part of this tilt towards still this fight for inflation is that the war in Ukraine spiked commodities, and they're just starting to come back. I'll just give the example. In 1980, the commodity index peaked, and then I think it took until 2003 to take out that high or something. I can look at it now, but it's usually how these things work. It takes a long time. Bitcoin's so great, how come it can't outperform the NASDAQ? And I say that facetiously because it's a fact. The first time, Bitcoin right now is at a ratio of about 1.76 to the NASDAQ. It was first traded that in 2017. Okay, so here are 6 years. If you bought Bitcoin on that day and you bought the NASDAQ in the same day, you have the same return. Yet you get much less volatility in the NASDAQ. You have this broad index. And by the way, typically you get support from the US government. You have the AI exposure. And I'm bullish Bitcoin, particularly for what you said about all commodities, every single commodity in the planet, history of commodities. People can create more with less every day. And the only really time they go up in the long term is when the currency they're based in is debases, i.e. the dollar. But the key thing about Bitcoin, it has that definable diminishing supply, which I obviously point out a lot, but that's unheard of, never seen before in anything I've ever seen. Obviously, it has that low adoption and early days. Now, I completely believe in that in the big picture, but if I'm right, which I think I'm going to be about the stock market, and it needs to go down for the Fed to lighten up, then everything's going to go down. Cryptos will go down the most. They're supposed to. They're already kind of telling us there's a problem going down. Yes, there's other reasons. The Fed's cracking down. Why the Fed's cracking down? Well, because FTX went under. Why did FTX go under? Because cryptos went down. You see the connection there? But Bitcoin should outperform. It's just not there yet. And that's why I think we got to get through that period. We can see a decent bear market in the stock market.
McGlone also notes that the Bitcoin to NASDAQ ratio is currently similar to 2017 levels when it was first traded. He says that despite offering less volatility and having a diminishing supply, Bitcoin has yet to outperform the broad-based NASDAQ index. This means that a bear market will actually create an opportunity for Bitcoin to shine while waiting for a divergence in the performance of BTC. McGlone suggests leaning towards cryptocurrency, as it has the highest rate of return. What do you think about the latest interview with Mike McGlone and his prediction for the crypto and stock market in the second half of 2023? Comment down below. Thanks so much for watching. Don't forget to hit the like button and subscribe for more content just like this. We'll see you in the next video.